Hey guys, it's Willie from Panda.com. Welcome back to the channel. Today I want to add on to my previous video regarding ARK Invest. And I also want to at the same time introduce it's not a new trading concept, but it's sort of like the naming is new. First, I guess I have to thank, I think it's Trading Fraternity that came up with a similar sounding name and concept. Is called the Ghetto spread. So basically you're just linking into either a debit or credit spread, it looks like. So for example, if you buy a call and then if you're lucky enough that the stock goes in your favor, in other words it goes up, what you can do then afterwards is you can actually maybe sell a call further up, and if you get really lucky, the calls might expire just below like the short strike, so then you can get like the best of both worlds. But I mean, in practice it's kind of hard to do, but over enough trades you might be able to get lucky on some of them. And I also want to introduce I guess like something similar. So thank you to, I guess, like I think it's Trading Fraternity. They also have a YouTube channel, and I guess you could search for it. And I guess I want to introduce my I guess like kind of like something similar. It's called a Ghetto married put. So basically in a regular married put, you're long a position, usually through a stock, and then after some time, again, like once the position moves in your favor, you can buy a married put, assuming that you can buy it at like a cheap enough price, and it's a little different from like a ghetto spread in that you're usually doing it within the same month. But with a ghetto married put, you have like some flexibility, so you can play it both to the long side and to the downside laterwards. It really depends on how good your timing is, or not, depending on your position. The reason I bring this up is because I recently shorted a front month put in the ARKK ETF, and I thought, you know what, I think I want to eventually turn this into a double dragon diagonal, but along the way there's going to be like some steps, and I think for 2021 I think that could be like ARKK could be like a really good trading vehicle for me. It has, I guess, like right now it has sufficient liquidity because a lot of people are interested in the ARK Invest space in general. I mean, there's so many YouTube channels and all types of I guess like in social media in general, they're pretty active themselves in the space. I think it's actually very smart of them. They'll get like a percentage of like the total assets under management, so I think it should be a good trading vehicle for at least into 2021. And it really depends on how my thesis plays out, where I think 2021 could be volatile, but could be also a still a profitable year, and then 2022 might get ugly. I mean, there's a lot of things in play. Like it depends on if what the Federal Reserve does, and maybe if there's any like big policies coming out of like the new administration. So there's a lot of factors at play, and things are looking kind of bubbly. And again, it's really depends on how crazy people are in terms of piling into the positions, or how the margin debt, and also like the way they're leveraging the positions. It really depends on how things will shake out. I expect maybe 3 more 10 to 20% drops, but that's just my estimate, and doesn't really mean anything. That's just my expectation based on my studies of prior events leading up to like a big bubble, and then after after that we'll probably, might get like another crazy like 50 to 80% drop, but I expect that to play out over time, assuming no other, some crazy like some world-ending event. It could be like another super pandemic. It could be like a super earthquake. It could be asteroids. It could be locusts, or whatever the like some like some crazy like doomsday scenario could play out. I'm assuming that I'm hoping that nothing crazy like that happens, but you never know nowadays. But let's just, for example, let's just say like we have a quote unquote normal volatile trading year. And it might be easier if I just show you on like my Tastyworks platform what I plan to do. Like it's basically like I'm gonna leg into like the position and trade around like this whole overall ARKK position that I plan to set up. So let's go to my platform. All right, guys, welcome back to my platform. So I have the ARKK ETF pulled up, and by the way, there was a new feature that Tastyworks rolled out recently, and it's their option chains. I guess like feature, and that's not to be confused with like regular options trade chains where you're trading. This option chains, the side tab feature over here, is to help keep track of all your trades, and I think they said like it's up to like a year. Um, but I'm looking at this like the drop down only gives me a 30 or 60-day option. So I don't know if they meant in the future that'll keep track of like all the trades in a year, but we'll see. I mean, they're always finding ways to improve like the platform. So I'll probably just make another video, like another short video later. Uh, this thing over here has a lot of potential, and I'm really excited to see where they can go with this. And I believe they also said they'll probably improve the charts. I mean, so far the charts are okay, but I guess like if you're a hardcore technical analyst, then you'll probably appreciate what they'll come up with. But let's get back to the RK and what I have on so far. So I shorted a front month put. When I originally put on the put, they didn't have like these funky strikes. I think it's I didn't see anything in the news regarding any splits or anything like that. So most likely, I think this is due to a special dividend that they paid out, and that's why the like the strikes look all funky. And if I look over to like their 2-year leap, you'll start to see some more like normal strikes. So I think that's what it is. Like it's probably due to the like a recent dividend. But anyway, um, the reason why I wanted to talk about like a ghetto married put, um, as opposed to like let's say like a ghetto spread, um, is that one I already have a long position via a short put, but if I had a maybe like a deep in the money call or something, like let's say at this one, well let's just make it simple. Like if I had like a equivalent deep in the money call at the let's say the 117.96 strike, a ghetto spread would probably be if you get lucky and you time it correctly. Let's just say for the sake of argument that I wanted to sell this 127.96. That's an additional $360 that I can potentially bring into the trade. So like ideally, I will want the stock to close like let's say like 127, um, or let's just say like 126.95 or something funny like that. And then I mean there could be a small chance that it could both strikes could get assigned. Um, but that's really rare. It hasn't happened to me yet. But I just wanted to bring that out there. But let's just go back to the concept of a ghetto married put. Usually, let's say like married puts in general, you start off with like usually people start off with like 100 shares of a stock, and they wanted like to find like some protection. So then they would buy a put, and how far they would um buy it would depend on like how long they intend to hold the position. So like if you're one of those people that think that ARKK is the jam, and you think that they'll do great things many years in the future, then I would probably like buy like I guess like the farthest sleep that you could, assuming that your long stock position is already sufficiently profitable and you want to protect part of your profits. You could do so by buying like a put. And how you want to position your strike is up to you. It depends on how much you want to protect your put and how long that you want to carry that position. Um, but my initial thoughts is that when I first put on this arcade trade, like the IB rank was actually a little bit higher. I think it was like 90, like in the 90s. And it's only recently that the IV rank dropped a little, but this is still pretty high. So that's why I chose to short the put to get long, and then maybe um, start off a like I guess like the first part of like the Wheel of Fortune strategy. But um, let's just say for the sake of argument that I do get assigned um, at 118. Or I guess at the 117.96 strike, maybe within the next 15 days. What I could do is I could, you know, continue in the next part of like the Wheel of Fortune, which is sell like an out of the money call at like a later strike, maybe in like the February 12th or like maybe just like the regular February 19th, um, like a call, depending on how, I mean, let's just say like I did get a sign of like at that 117.96, um if the volatility continues to be this high, I mean you can get, I mean look at this, like you can sell something at like 134.96 and collect at least $510 on like just like per 100 shares, and that would be pretty ridiculous. And or let's just say like volatility collapses and then like the call isn't really worth selling. What I could do, I could actually start, turning this into like uh, I can morph this like a few different ways. Let's say I want to protect a long position, so I would do like a married, or a ghetto married put. So let's just say I did get assigned at 117.96, but I'm a little bit greedy. So I want to, depending on where ARK is trading at the time, I could probably buy um, let's just see here. Right now, like I actually want to do this because like the IV rank is so high. So like I don't want to pay out too much for insurance. But let's just say like the volatility collapses and this put over here, the 122.96. Let's just say it collapses to like maybe something to like around like $2,000. Then I might consider it. Really depends on like how how far up um the IV rank is, or how low the IV rank is. Um, and it can protect that position for up to 2 years with you know, let's just say for the sake of argument that it does drop to 2,500, and then I can like kind of go back into the front month and then short like another put against it to kind of like decrease the premium. And And so you can kind of like, depending on what the IV rank is at the time, and like the in the front month and the like the back month, you can go back and forth and see how much you can offset like your your long premium position, and then vice versa. Let's say you can actually buy a straddle or a strangle. So then you could buy like, like maybe like the 130 like call or something, and then like you sell like a further out of the money like call in the front month, and eventually morph this into like a double diagonal, and then you can play ping pong with the market, and depending on which way it goes, you can buy and sell depending on how far, um, I guess like the opportunity that the market gives you at the time. So that's something to consider. But for like the sake of this argument, I just want to make it simple that, like, let's say I want to eventually start off with like a long married, ghetto put, or ghetto married put against like a long position. So it's another way of like doing a uh, a ghetto spread. This is just like just another variant of that idea. So once again, I just want to thank, I guess, like the trading fraternity channel for like coming up with like that I guess like that name, and then I'm just borrowing it for like the sake of this video, and then uh and then I guess like to kind of wrap up, like the reason why I brought this up is I think like RK presents like a really good opportunity both to the long and the short side, because I can see this being one of those funds, or like a some kind of trading vehicle where, eventually I could see this being like a supernova type of position where like I could see this going from like right now from 125 to like, something crazy. It could, I mean, it could even double. Like, a year ago, I would have probably looked at you like you were nuts, but then like there's a lot of hype, and a lot of I guess like high expectations for this fund, and you never know. It could actually be kind of like a black swan to the upside. And you can double your money within in the year again, or more. But also at the same time, like after that, like you could see it, like crater, to like, 50 or something like that. And so that's why it's good to like be aware of like the the probabilities and the possibilities. Today was like the last trading day of 2020, thank goodness. And I mean, 5 million shares on like a light day is it's pretty respectable. And they have a pretty good option chains, at least on I guess like I would say like their main ETF. So yeah, I mean, even if you look at the IV, like, it's like six potentially pricing in a $67 move, either up or down. So it's not like out of the possibility. So again, like, I could see this ETF becoming like a supernova, but then after that, it could, like, after, what happens eventually to a supernova, like, a star can become like a black hole, and like, it just like sucks into your money. So that's why, I just want to bring to your attention like different trading possibilities. So, I hope you like this type of video. I hope it's like different from all the different other like YouTubers. Like, I know like people are excited about the market and the potential money that could be made, but then they also have to look at the other side. Like, there's a, you know you could lose money too, and I want to present people like options, no pun intended, ways to like protect some of the money that you made in 2020 and 2021. And so yeah, if you liked it, please consider giving it a like, and then please consider subscribing as well if you like this type of content. And then if you have any suggestions as to topics that you want me to cover, I'll be happy to do it. And so I think like in the next video, maybe I'll cover like uh, option chains, and then maybe after that, maybe go over like the general concept of campaign trading. And I look forward to seeing you in the next video. Uh, Thank you and Happy New Year. And I hope everybody makes money like regardless of if you're long or short. So I'll see you in the next video. Bye now.